Part 3, Negotiable Instruments. We all have the basic knowledge of what we think is basic knowledge when entering into a contract. There will always be paperwork leaving a trail of the transaction. The question is, are we aware that multiple transactions are taking place simultaneously when you sign your promissory note? How is the bank using my promissory note? They are using it in a number of ways. First, they are depositing it after they endorse it. See, endorsing the instrument and adding words after you sign it is an alteration of the instrument because when it was done without your knowledge. Normally, when you endorse an instrument, you're about to cash it for funds. If this was not the case, the bank would have no need to endorse the instrument. You, as the authorized signer, gave life to the instrument when you signed it. When the bank endorsed the promissory note, it is claiming ownership instead of receivership as a fiduciary. The deposit into your account supports a creditor and debtor relationship between you and the bank. When the bank takes possession of your promissory note, their policy forces them to stamp the instrument with an endorsement to establish its liability to you. The bank uses standard bookkeeping entries, assets, and liabilities. When a deposit is made into your account, the asset side increases to the amount of the deposit. The bank does not own the asset. Also, the liability side increases as well to the amount of the deposit and represents the liability the bank has to the depositor. So what this means is that the bank has to pay the depositor back its funds if requested. This is why they do not disclose depositing of your promissory note. The bank illegally claims ownership of your instrument by the way of the deposit. Since the promissory note was deposited, it is classified as a receivable to the bank, which is an asset. Now remember, all assets must have a matching liability. What this means is that if your promissory note has a value of $100,000, then the bank's liability will be $100,000 to purchase it. For the accounting to balance properly, the bank must already have $100,000 of its own money to satisfy the purchase obligation of owning your $100,000 promissory note. This is where the bank commits their accounting fraud. The bank cannot show originating funds for the actual purchase of your promissory note. Paperwork is the essential part of the transaction to ensure that no fraud has taken place. They cannot show the paper trail because your promissory note was never purchased. It was concealed from the chain of title to give the appearance of the bank's ownership. The question is, for what purpose? To steal your promissory note and your labor associated with the cash flow generated by the instrument in the form of monthly payments. Remember, the bank cannot claim the rights to the cash flow payments if it did not own the promissory note. To accomplish the theft of your instrument, the bank does not disclose any vital information, such as the fact that you are the originator of the loan proceeds. As the owner of the promissory note, you are the creditor. The bank is not loaning any of its funds to the transaction. The bank has opened up a demand deposit account in your name and will deposit the instrument into that account. The bank will be loaning you credit from the liability side of the ledger on its books. Loaning of credit is a violation of banking policy and is a legal consideration for the purchase of the promissory note. This is a known fact throughout the financial industry that no financial instrument such as a cashier's check, money order, savings bonds, or any type of instrument with an order to pay money can be purchased with credit. It must be purchased with cash. Without ownership, there are no rights under the instrument. This lack of disclosure completely voids out any obligation you have to the bank because your obligation was made under false pretenses. Besides, the bank completely altered the original terms of the contract by endorsing and depositing your promissory note without your consent. Now, once the instrument is deposited, what does the bank do next? The answer will shock you. Stay tuned for part 4 on negotiable instruments. Remember to sign up, subscribe, and become a member of the cooperative because the more members we get on the board, the faster we can change these injustices.